Welcome to my channel. I'm Scott, and in this video we're going to talk about Moderna's fourth quarter earnings. Before we get into their fourth quarter earnings, let's talk about the company at a high level. So Moderna is a pharmaceutical and biotechnology company based in Cambridge, Massachusetts. Their only commercial product is the Moderna COVID-19 vaccine that's marketed as Spikevax. As of the end of 2022, the company had 44 treatments and vaccine candidates. Of those 44, 21 have entered clinical trials. It could take a long time and a lot of money to get a drug approved and marketed to the general public. Sometimes it could take over 10 years and over $1 billion. In the company's pipeline are vaccines for influenza, HIV, respiratory virus, Epstein-Barr virus, Nipah virus, a combined single-shot COVID-19 booster and influenza vaccine, 2 cancer vaccines, and a bunch of other vaccines. The company was founded in 2010. Their revenue growth in the past few years is phenomenal. In 2019, their revenue was only $60 million and a net loss of $500 million. The following year, their revenue grew to $800 million. That's more than 12x 2019, but their net loss was even worse, $750 million. In 2021, get this, their revenue went from under $1 billion in 2020 to over $18 billion in 2021, and a net profit of $12 billion. Their revenue increased slightly in 2022 to $19 billion. Their net profit decreased to $8 billion. Here's a chart of the company's stock price the last 5 years. So their current market cap is $53 billion. The stock is trading at $140. It did peak in September 2021 at over $450 a share. That means their market cap was over $150 billion. So it's about 1/3 of its peak. So if you bought this stock at the very end of 2020, you'd be flat right now. So that means if you held the stock for a little more than 2 years, you would have had no return. But of course, investing is a timing game. So if you bought it around here, you'd be down a lot. But if you bought the stock just a few months ago, you could be up 10-20%. And of course, if you bought it before COVID, you'd be up several 100%. Here's a chart of the top 20 biotechnology companies that trade in the United States. The largest company, over 300 billion market cap, is the Danish company, Novo Nordisk. Moderna is third at 55 billion. There are hundreds of biotechnology companies that trade in the United States. A lot are really small. Of the top 20 companies, the average market cap is 45 billion. The average revenue is 4 billion. Moderna has the second highest revenue of 19 billion. It's a lot higher than Biotech. They have nearly 5 billion of free cash flow. Look at Biotech, 12 billion of free cash flow. They're just rolling in the cash. Moderna's price to book is 2.9. The average of the 20 companies is 16. So they have a really good balance sheet. Their PE is 6.6, a lot better than Novo. We can't look at Biotech because they have negative earnings, so we can't look at their PE. Moderna's price to free cash flow is 12, the average is 31, and Moderna has a great price to sales of 2.8, average is 95. If you're wondering where Pfizer is, they're not in the biotechnology industry. They're in the industry drug manufacturers. This is Moderna's press release for their fourth quarter earnings. So in the final quarter of 2022, revenue of 5.1 billion, net income of 1.5 billion, and EPS of 361. If you annualize that, that's 1444. Because this is one quarter, to annualize it, you multiply by 4. A quick way to multiply by 4 is to double the number twice. So if you double 361, that's 722, and if you double 722, that's 1444. So if you want to multiply something by 8, you double it 3 times. It's a little math trick. Their full year revenue was 19 billion, net income of 8 billion. So their revenue in the fourth quarter was 5.1 billion. If you annualize that, that's over 20 billion. So their fourth quarter revenue was higher than their average for 2022. But their net income was lower than their average for 2022. If you annualize it, it's 6 billion. For all of 2022 was 8.4 billion. They generated 5 billion of COVID-19 revenue that's supposed to be delivered this year in 2023. And the company has some breakthrough vaccines and therapies that they're looking to get FDA approval this year. The final phase of the process is phase 3. Their flu vaccine is in phase 3. And this company is developing a cancer vaccine in combination with Keytruda. Keytruda is a blockbuster drug for the company Merck. This is the company's income statement. In the fourth quarter of 2022, their revenue was $5 billion. It's down a lot from $7 billion in the fourth quarter of 2021. But their revenue for all of 2022 is higher than all of 2021. And the reason fourth quarter was worse in 2022 compared to 2021 was a decrease in sales of COVID-19 vaccines. They had so much sales in the fourth quarter of 2021 from those vaccines. Below revenue on the income statement are the expenses directly related to generating the revenue. So cost of revenue, they call it cost of sales, was $1.9 billion. Up a lot from the fourth quarter of 2021, almost exactly double. And they spend lots in R&D. And biotech companies spend a ton of money in R&D to develop new drugs and vaccines, $1.2 billion, also double 2021. So their operating expenses are up a lot. It went from $1.8 billion to $3.5 billion. Same thing in all of 2022, up a lot from $5.2 billion to $9.8 billion. So their operating income is down a lot. It was $5.4 billion. Now it's $1.6 billion in the fourth quarter of 2022. Net income is also down a lot, from $4.9 billion to $1.5 billion. For the entire year, it's down from $12 billion to $8 billion. But at least they're profitable. But the problem is the stock price was bid up so much, it was only a matter of time till it came back down. Because the stock shouldn't have never been over 100 billion market cap. They really only have one vaccine that's marketable. I still think 50 billion is a bit high for this company, but as you know, a stock price is based off a supply and demand of the market, not necessarily how well the company's doing financially. Their EPS is also down quite a bit from $30 to $21. If you're wondering what the difference is between basic and diluted, basic is all the shares outstanding. Diluted is assuming all the convertible shares converted to equity. Examples of convertible shares are convertible preferred stock, convertible debentures, and warrants. Let's look at that balance sheet. Cash has gone down quite a bit from $6.8 billion to $3.2 billion. Investments went up a lot. When a company has lots of cash on their balance sheet, they usually invest some of the money in short-term investments, like commercial paper or treasury bonds, to earn a little interest on the money. That's nearly $7 billion. Accounts receivable is down a lot, from $3.2 billion to $1.4 billion. Inventory is down from $1.4 billion to $1 billion. So current assets went from $16 billion to $13 billion. But their current liabilities are below $5 billion. Current assets of $13 billion, current liabilities of $5 billion. So their current ratio is well above 1. It's actually well above 2. Let's look at their non-current assets. These are assets that would take more than a year to liquidate. Investments of $8 billion, PP&E, property, plant, and equipment, like factories and machinery, that's $2 billion. So their total assets are pretty flat, from $25 billion to $26 billion. Current liabilities are down from $9 billion to $4.9 billion. What's down a lot is the best liability, deferred revenue. That's down from $6 billion to $2 billion. Deferred revenue is when a company receives payment for a product or service before it's delivered. Like for instance, if a company gave Moderna $1 billion to buy vaccines, but the vaccines won't be delivered until 2023, Moderna receives the cash, so the cash goes up $1 billion, but they cannot book the revenue onto their income statement, so they put it on their balance sheet as a liability, deferred revenue. And once Moderna delivers the vaccine, they take that dollar amount off their balance sheet or for deferred revenue and book it onto their income statement as revenue. So their total liabilities are down from $10.5 billion to $6.7 billion. Retained earnings is a sum of all the company's prior net incomes minus the sum of the dividends they paid out. They have lots of retained earnings. It went from $10 billion to $18 billion. I wonder if they're buying back lots of stock with all their profits. That's generally what companies do when they're really profitable. So their total equity is up from $14 billion to $19 billion. Equity is total assets minus total liabilities. It's a value of the company according to the balance sheet. And the most important financial statement is a statement of cash flows. So I think operating cash flow is the best indicator of how a company is doing, and their operating cash flow is $5 billion for 2022. It was nearly $14 billion for 2021. The reason it dropped so much was a $4 billion drop in net income, and the other really big swing is deferred revenue. That went from $3 billion to negative $4 billion, so that's a $7 billion swing in the wrong direction. Remember, the statement of cash flows is broken into 3 sections: operating, investing, and financing. They spend pretty close to the same amount in marketable securities. This is when a company invests in short-term securities. That went from $13 billion to $11 billion. They also sold some marketable securities. They sold $3 billion in 2022. They sold another $3.5 billion in 2022. So $3 billion of those securities matured, and $3.5 billion they sold before they matured. They didn't spend that much in PP&E, only $400 million. It's not a lot relative to the size of the company. It's a little more than last year of $284 million. So in their investing section, they had a cash outflow of $5.2 billion. Last year was a cash outflow of $8.5 billion. So the company does buy back a lot of stock. They bought over $3 billion in 2022, which is a lot more than 2021. It was under $1 billion. That's another way for the company to give back to its investors, to buy back stock. When a company buys back stock, it decreases the shares outstanding and makes your shares more valuable. And the other way for a company to give back to investors is to pay a dividend. Those are direct ways for a company to give back. An indirect way is for the company to sell a lot of products, which will hopefully inflate the stock price. So in 2021, they had a cash inflow of $4.2 billion. In 2022, it was a cash outflow of $3.6 billion. But most of that cash outflow was to purchase common stock. So the company looks like they had a great 2022. So it could be a lot of big things in 2023. It looks like they have lots of stuff in the pipeline. So hope you learned something new. Like, comment, subscribe. Talk to you soon.